keeping you informed with news that matters. Fox 40 News at 7 starts now.
Coming up this fall, it's a lot of people trying to either refinance or get into homes. It's a scary time, especially with the Fed raising interest rates.
Again this week.
But, right, exactly, yesterday. So how's that going to affect home prices? And we're going to be speaking with a local expert who shows us some creative ways to get into homes for financing.
That is the key word, that key term right there. 2 words, creative financing. And there's so many ways that you can get into a home. And what do? If you do need to buy a home, if you need to relocate or if you're relocating here to our area, creative financing, there's less competition right now.
There are a lot of
home
options.
prices are going down. Yeah, there's options for you. So we're going to highlight them.
If you've been looking over the valley trying to find the best home, don't let the rising interest rates stop you from buying a home. There are a lot of options right now, and there are ways you can save. So let's talk numbers with Brandon Haefele. Catalyst Mortgage joins us now live from Roseville to explain. Brandon, thanks for joining us.
Thanks for having me, Richard.
So let's talk. Sure, yes, interest rates are going up. The Fed just raised interest rates yesterday, so that will trickle down to us. But that doesn't mean you should not look for a home if you really need one or you want one or you're moving up the chain from a smaller home to a bigger home. There are more options out there.
There really are, Richard. You know, we're right now, people that have been on the sidelines because they were priced out when it came to investors purchasing or people moving from the Bay Area, first-time home buyers now have a unique opportunity to take advantage of homes that are for sale, but also using different grant programs available to have your down payment gifted to you by the various agencies in California.
So you have to be careful on how you look and where you look. But as far as the number of homes, there are more homes on the market. Those prices, I think in some of the facts you sent over, 56% of Sacramento area homeowners, 56% or 50% of homes in Sacramento are cutting prices or cut prices in June. So the prices are coming down. I think people who see this are going to say, hey, are they coming down enough to counterbalance how much my rate is going to cost me?
Well, you know, that's a great question. And right now, we're not seeing that. We're not seeing home prices come down enough to really balance off the increase in mortgage rates. You know, right now, if you bought a $500,000 home or whatever it would be, 1 year ago to now, your payment's about 60% higher for that same purchase price because of rate. But it's more important to look at the long-term plan and where you're going to be. And on top of that, think about when you're purchasing that home, in 2 years from now, you could potentially refinance when rates do come back down.
Well, and that's an important point here because your house will most likely go up in value, as most homes do in California. So you're going to be making a lot of equity right there, and that could counterbalance the high interest rates. But also, interest rates, even if it's not in 2 years, 5 years, whatever, they will come down again, hopefully, and that's when you want to be on the lookout for and then refinance and get a better rate, and you'll be in a much better position with more equity.
Well, absolutely. And I think that it's important that, we are going to see home prices continue to soften in the Sacramento region, but still affordability is at an all-time high in our region. Sacramento still is one of the most affordable cities in California. And even with, rates being up and now having more homes on the market, this is the time for first-time home buyers really to look at their options, see what grant programs they qualify for, look at getting in. And right now you have a lot more purchasing power. And people that are on the sidelines when it comes to interest rates, there are options to do things like what we call 2-1 buy downs, where for the first year or two have a lower interest rate, and then after that the rate will go up to whatever the fully indexed rate would be, let's say maybe a 5.5% or 6.5%. But there's options to be able to get creative with financing, so that way in a couple years from now when rates do pull back, you can go ahead and take advantage of a refinance and get that payment lower.
And so that's the thing, looking long range as opposed to just the pain of getting that interest rate right now. Also, lock in your rates as soon as possible because they might go up in the short term as well, as the Fed has indicated. Brandon Haefele, thanks so much for the options in the housing market, which can be a tricky beast and scary for a lot of people. It doesn't have to be. Brandon.
Thanks so much, Richard.
Thank you.